qué es lo que hace Jerome Powell, pero de todas formas también queremos continuar centrándonos en la crisis financiera, en la crisis del sector bancario. Ahora vamos a hablar de este tema y de cómo está afectando a los bonos, al mercado de la renta fija, con Alliancebernstein. Nos acompaña su jefe de desarrollo de negocios de renta fija, Arnaud Mounier. Arnaud, thank you so much for being in Negocios Televisión.
Thank you for having me.
Good afternoon, Arnaud. Given the stress in the banking sector, which extends from regional banks to international players like Credit Suisse in Switzerland, what is Alliancebernstein's assessment of the risk of contagion to the broader financial system?
Yeah, thanks for your question. I think the first thing I'd like to say is we try to make a difference between the current situation and what happened, for instance, in 2008 during the financial crisis with the Lehman Brothers. I think a number of people now are trying to draw parallel between the two situations. We think they are quite different. In 2008, we have to remember that a lot of the issue came from the bad assets, the subprime assets that were finding their ways on the balance sheet of banks. And here, this year, the situation is quite different. I mean, the reason for Credit Suisse to collapse or for Silicon Valley Bank to collapse is not a problem of bad assets like subprime. It's more a problem of loss of confidence by their clients and massive withdrawal of money in a very short time. So we had questions from clients about mortgage-backed securities in the case of Silicon Valley Bank. They are not bad assets. They just happen to be low on value at the moment because interest rates have gone up very quickly in a short amount of time. But fundamentally, they are not bad assets. US Treasuries, those MBS were not bad assets. And in the case of Credit Suisse, it's really a problem of confidence. A lot of clients have left the bank in Q4. A lot of clients were concerned with the restructuring of the banks that the management has announced, and it's taking a lot of time to see progress on this restructuring. And given the volatility in the market, they have lost confidence and they have lost patience. So that's the first point, really not to draw too much parallel between 2008 and now. The second point we would like to make is it's true that it's difficult to analyze some of those banks. When we look at the solvency ratio of Credit Suisse, when we look at the quality of their balance sheets, we were quite confident that investing in Credit Suisse was quite a good investment. And unfortunately, this run on the bank with a lot of money leaving the bank in a very short amount of time is very difficult to predict. So I think it tells us that investors should be always very, very diversified on those banks' investment, and always try to focus more on the national champion, where you have a good chance that the regulator will step in or the government will step in to save some of those banks, like it's the case in for UBS and Credit Suisse. And the third point we would probably make on this bank crisis is, if we look at the last 3 days of trading, a lot of the banks that were trading at a big discount since this Credit Suisse news have rallied again. So the prices of bonds from those banks are back to almost the level that they had before this Credit Suisse story. So it's not a contagion at this stage. We will obviously be very careful and monitor that very closely, but we don't think there is a systemic risk at the moment.
Today, Arnaud, we have the meeting of the Federal Reserve. The market has significantly changed its view on the Fed's future actions as a result of the Silicon Valley Bank collapse and its aftermath. So what does Alliancebernstein think about the path of interest rates in the United States and in Europe now?
Yeah, thank you. Look, I think in the US, what we saw, if you think a couple of months back, in January, the market was very optimistic, pricing some rate cuts by the end of this year. And that was probably a bit too optimistic. That's why in February, when we had some poor CPI prints, the market really changed their view to something much more pessimistic, thinking that there would be no rate cuts in 2023. And so you can see these massive swings of market sentiments is what we experience again now on the other side. In March, now we are seeing the market being pretty convinced that the Fed is going to pause and cut rates sooner than later. So I think for today's meeting, the market is widely pricing a 25 basis point increase. But more importantly, the market is convinced that the Fed will have to pause quite quickly. And now we are even seeing some investors putting some probability for a very significant rate cut by the end of the year. So long story short, we think that the upside risk for rates to go much higher from the current level is quite limited now. Now that we have this bank crisis going on, there is a lot of tightening of financial conditions, and so the Fed does not need to do all the work by hiking rates. Now the market itself is much more conservative. So overall, we think that it's unlikely that the 10-year in the US, for instance, is going to go much above 4%. It's probably going to trade within a range of 3.5 to 4% in the US. And in Europe, it's quite a similar story in a sense that the ECB was very much focused on inflation, and that's probably the right that thing to do because inflation is not under control yet. Nevertheless, they have to see the potential impact on the banking sector, and that something else might break. So again, we're thinking that the ECB might take a pause sooner than later and potentially refocus on growth toward the end of this year by maybe cutting rates a little bit. But it's very important to understand that the central banks still have a very strong focus on inflation, and this is not a problem which is solved by this banking crisis at all.
In this context, Arnaud, what are fixed income market sectors that Alliancebernstein favors now or stays away from?
Well, I think we have to probably reconsider the risk-taking that we've been doing since the beginning of the year. I think high-yield bonds have been doing very well in January. They were okay in February. I think to the surprise of many investors who were very cautious because they were pricing a recession risk quite high. So the reality is we are going to be a bit more prudent now on high yield. The valuation after the bank crisis is a bit more attractive, but we just want to stay a bit more in the comfort zone of investment grade bonds. So we are reducing our exposure to high yield bonds. We are increasing our exposure to investment grade bonds. And we do note that we have not seen a lot of spread widening from peripheral bonds like Italy. So they are still decently expensive. So we are not rushing to peripheral bonds, for instance. We like to take our duration mainly from the German bonds on some other core government bonds. So in summary, taking a more prudent stance on our credit risk taking. And in terms of duration, we like to have some duration in the portfolios. I think last year, one of the big challenges for fixed income and for markets is rates and credit assets were selling off at the same time. And what we saw during this banking crisis is actually rates are performing pretty well when credit assets and risky assets are selling off. So we are seeing this negative correlation between rates and credit that we normally like when we build portfolio. So for 2023, we want to have some duration in our portfolio and probably a bit less credit risk overall.
Arnaud Mounier, Alliancebernstein, thank you so much for being here in Negocios Televisión. It's been a pleasure to speak to you.
Thank you.
Bueno, y nosotros pendientes del mercado y